Hey, welcome everybody to another Money Slam. That's right, it is the Money Slam presented by the Idea Collective Small Business Incubator, brought to you by the generous sponsors at Quick Trip and Bank 59. I'm Brent Halfwassen. Megan Schwan's with me as well, and we are here to answer the money questions that come up for small business owners. So, super awesome to be with you all, and thank you everyone for joining. Megan, thanks for being today's fine leader and telling us all everything we need to know about finance.
Yeah, I'm happy to be here and excited to talk money, which I know is super fun for everybody, right? Maybe not all the time, but
Hey,
yeah, this
by and large, most of us got in this so that we can make a little bit of
make
money.
money.
Uh,
Yep,
and even
yep,
when you're in a nonprofit, you like to have enough money to be able to pay the bills, feed the kids, and take a vacation every once in a while. So,
yeah, for sure. It's super important, which I think is probably one of the things that a lot of people don't always realize is that all of your decisions really come back to your money. So the more you understand it and how it works and ebbs and flows through your business, the stronger you will be at running a successful business and also making really good data-driven decisions versus just on the fly, which I think is a big challenge for all of us business owners because I don't know about you, but I got into my business because I knew how to do accounting, but I did not know anything about building a business. So it's been a journey for me as well, along with all of you. So I guess, where do we want to start here, Brent, with asking if anybody has any questions?
well, let's
This
start
is
with a
the
little bit of
slam.
intros because not
Okay.
necessarily knows us or what our expertise are. So, uh,
Yeah.
I am Milwaukee small business coach, so I work with a lot of entrepreneurs who are have early and established in their business, but have reached a plateau. You feel like you're spinning your wheels and you're not making the money that you were hoping to get. My background is actually I've been trained in finance. I have a finance degree, and that was my first role in corporate finance was doing something called financial planning and analysis, and also productivity analysis. But ultimately, what that means is understanding what actually happened so we can record the numbers, understanding why that happened, and then figuring out what the heck are we going to do now that that went forward. And I do that with a lot of my coaching clients. And for me, when you tell the story of your business, your numbers show up in my head. And I know that sounds super sexy for all those people who love numbers, but the numbers just show up. And conversely, when I see financial statements, that actually tells a story about your business. And the fun part for me is that when what you tell me doesn't actually match what I see on the piece of paper, that's where we get to work and start taking care of the disconnect, because everything you do is shows up somewhere measured, whether there's a dollar sign or not. Usually it can be measured somehow. And in my world, if it's measured, it's finance. And if we can measure it, Megan was just talking about it, that's where we start figuring out how do we let the data drive our business. Megan, what about you?
So I'm Megan. I am the CEO and founder of Sidekick Accounting, and we specialize in small business bookkeeping, tax preparation, and tax planning. We work with clients across the country virtually and really put an emphasis on helping them understand their numbers and how to use them to make better decisions and grow a profitable and successful company. So I'm excited to be here. And I've been in business for 9 years. Grew from the 7 other people right now, and we're just continuing to grow and work with small businesses across the country. So lots of fun.
So we want to encourage people to use the chat if you have questions, you have feedback you don't know. We've also got we're all IC members, so it's an intimate enough group. Just pop off mute, and sarcastic remarks are always appreciated. But anything you want to share, and if at some point you want a little bit of feedback, like maybe right after we drop the recording, so it's not in the vault for all to see, I think either Megan and I will be happy to do that. But I thought we would just start with having a quick discussion about some things that people should be asking whoever's doing their numbers, or should be looking at on a regular basis. Last Money Slam, we talked kind of about the different financial statements and some various pieces of what you can see. But I would expect, and Megan's probably got tons of experience in this, there are lots of questions that she probably wishes her clients did ask. And there's lots of things that come up that should be asked. And so, Megan, I don't know if any come to mind to you about as a business owner in particular, let's assume I just got my statements back. I've hired Sidekick Accounting. Your company delivers, sometime about right now, you expect to get the financials for June or maybe the first half of the year. And despite people's first inclination, which is first to hit the delete button and next to go file it somewhere and never look at it, let's assume we actually look at it. And what should we be asking? What should we be thinking about when we see that?
Yeah, and that's a great question. And one of the things that we do for our clients to help them not delete right away is we send a recap. And so there's a few different areas that we put on there right away to help foster some of those bigger areas to look for. One of them is your bottom line. Did you make a profit this period? Like, where is that landing? Are you in the red or are you in the black? And that's a really important question just overall, because obviously if you're not profitable, if your income is less,
Jargon
can you hear me?
In the red or in the black. Those are
Right.
accounting jargon. What's that mean?
Oh, good point. So if you're in the red, that usually means that your income was less than your expenses. So you spent more than you made. And if you're in the black, that means that you have an income. So you have a net income. So after you take your income and all of your expenses, minus out all your expenses, there's still money left, at least on paper. That's a whole nother conversation too. But it is important because you got to be profitable if you're going to have a sustainable business. And that indicates whether or not, from a very base level, if you are profitable. So that's a really important thing to look at. But then we also have, what that number is for the year so far. And then what it was comparatively to the previous period. So like June of this year compared to June of last year, what was the difference? Are you higher? Are you lower? And that kind of helps you to see what your trends are. Like, your business, but when you look at your reports, you should be able to make a straight line for what happened in your business to make that number make sense. So maybe it's lower this year compared to what it was last year. Well, I know that this year in June, I lost a client, or maybe I shifted my services. Whatever it might be, there should be an explanation for why that number changed from a previous period. And that's when you have a better understanding of what it is. It's when you don't know why there is a change that you have to dig in a little bit deeper and say, okay, what actually happened here, so that we have a better understanding of what makes up those numbers. So those are a couple of things right off the bat that you want to be able to take a look at. The other thing is your gross profit margin. And what that means is every business has some things that happen that are directly tied to your sales. So for instance, when you have a product-based business, it's the supplies or materials that you need to create your product, or purchase if you're doing retail. So those purchases that you're going to purchase and then resell. For me, as a service-based business, and a lot of you, it could be payroll, it could be software that you have to use for your clients. Those are some things that are directly tied to the income. And that number of what those things cost compared to your income is called your gross profit margin. And is because whatever that percentage is has to carry the rest of your expenses. So that's something that you can start tracking to be able to understand where you are and then where you're wanting to go. So like if it's a lower percentage, that means that it's costing too much to create your income. You have to go back to how you have your items priced. So how do you have your services priced? How do you have your products priced? Because if that gross profit margin is too low, then it means you're not going to be profitable after you take out everything else, or you're not going to be paying yourself. So those are some things we help identify and track. And that would be something definitely, because your eyes might be glazing over right now. You're like, gross profit margin, what the heck is that? What did she just say? So that's a question that you want to be talking to your accountant about. Like, hey, what are my margins on my financials? Can you help me to understand that? Because of course, talking about it here is really hard to see, but if we actually look at your financials, it'll be a lot easier to understand, because then you can see those numbers in action. Brent, did you have anything to add right here? I think you had.
Yeah, well, I would add, I love some of the things you said. I think comparisons, I think comparisons are the number 100% thing you should do. If
Yeah.
you get a financial statement and it just shows you this is what you did in June, there's some things we can learn from that. Megan was mentioning the percentages. I can figure that out. That's what was my, what was my gross profit? Michelle asked a great question. Is there an ideal percentage on that? It depends on your industry. If you're in a restaurant business, the percentage is something. If you're selling alcohol, your gross profit should be like 90% or bigger. And you'd be like, holy cow, that's a lot. Yeah, well, you got to cover all the rent, all the staff, all the everything else. And that's why you can go to the grocery store and buy beer or wine for a whole heck of a lot cheaper than you can when you go out and buy, the margarita, even when they're at happy hour, they're still 5 times more expensive than you can make it at home. And that's because the whole model works based on the alcohol supports all those other costs Megan put out there. You got to buy the tables, you got to clean the floor, all that money has to be supported. But there are benchmarks you can go and find on the industry. Comparisons, early businesses. So by default, usually you get to see last year. What did I do in June 2023 versus June 2022? However, if you're just getting started, that may not be, or even if you've been in business for a year or two, that may not be that much of a meaningful comparison, because a year ago, I only had 1 client. This year, I've got 10 clients. Like, wow, I'm doing like 1,000 times better. Well, really? Maybe I need to compare it to last month. Maybe I want to look at a quarter. So typically the calendar quarters are 3 months. So it would be January, February, March versus how I just did in April, May, and June. So there could be a couple different ways to look at it, but the comparisons help because I start to find out, wait a second, that's cool that my sales were up 10%. I like sales going up. However, I noticed that my labor cost went up 25%. Is that a bummer? Is that not a bummer? One of the things Megan said, you could compare it to what's going on in your business. Oh, that's because I hired that extra person. I finally decided it was time to get that done. We would all love in a happy world where like everything is sort of infinitely divisible. But if I'm going to hire a new person, like the first time I decide to outsource, right? I decide I need to bring Megan on to do bookkeeping. I need to bring Susie on to like keep my life organized. The first time you pay for that, it's not like it slowly ramps up. I got to write a big check or ACH or credit card or however we're paying these days. Does anyone use checks? Anyway, right? There's a bump up. And so if we know what that is, but the first thing you should let me do is say, why is that there? The second you ask yourself, why is that there? That's a question you may want to ask your bookkeeper. Hey, can you dig into that? I don't know why that number is higher than it was before. Is it supposed to be there? Did you plan to spend $500 on those services and it turned out it was 1,000? We want to know what happened. Sometimes it can literally be as simple as, oh, there's an entry there on the 1st of the month. And then because the 1st of the next month happened to be a Saturday, the bill came through on the previous Friday. And so there's one also on the 31st of the month. So I've got 2 showing up in the same month, but really it's still basically once a month I'm paying. Sometimes it's, oh crap, I didn't realize that expense was there. Oh, I didn't realize that I thought I canceled that, or I didn't know ahead, whatever it is. So anytime your mind goes, and when you see it in comparison, it really helps. The last one, and I'm going to pitch this as an idea to Pat. The Money Slam team ought to lead a guided budgeting session, probably sometime near the end of the year.
What I was just going to bring up too was we usually help our clients create a budget so we can run a budget versus actual report, because that's another thing that can kind of help you identify, like, is there something wrong? Is there an area to be concerned about? Am I in line with my goals or exceeding or underperforming on my goals? So that's a great tool. That's a great idea.
What do they plan to do? Some things really important. So we talked about budgets and forecasts in the last episode, but the difference is that the budget is typically set yearly. And you don't set it and forget it, but you set it and you hold it, and then you update your forecast. But ideally your budget, the places where budgets seem to really matter in my experience is on things like sales and marketing costs. The temptation is always, but if I just do a little bit more, I will get a little bit more revenue. Sometimes those are true, and you want to evaluate it on a project by project basis. It also tends to be the place the money runs away from you the quickest. Some other places are labor costs. If I outsource, so here's my calculation I do on outsourcing. I know what I charge on an hourly rate. Just because I offload 4 hours a month to Megan because we hire her firm, and another 6 hours a month to Susie because I hire her firm, doesn't mean that I suddenly take 10 hours of free time and multiply it by my rate. If I don't have another customer to fill that slot, I've added an expense. Now I may have something strategically I'm doing, like, hey, I'm going to go out on the speaking circuit and I'm making an investment to give myself 10 hours of time, because it's the one thing as an entrepreneur you could never get back is time. I can make double the rate next time on a deal, but I can't get double the time back if I miss the opportunity. But just know that when you're doing the outsourcing, you want to be thoughtful about, what am I actually getting from this? And there's lots of ways to measure that, and we can get in and talk about that. But it's not necessarily as clean as, oh, I can make $200 an hour, so if I can outsource and get 10 hours back for cheaper than $2,000, then I should do it. Well, maybe not, but I want you to be thoughtful about that as you go, because those tend to be, in my experience, to see, oh, I did this and I did that and I got this subscription, this CRM thing's doing my whatever, and then you get your financial statement in and it's not black, it is definitely red. And we got to make sure that's the right move for your business.
Yeah, having that understanding of those numbers and your ROI, or return on investment, for the different pieces in your business are really important. So definitely.
And does that also, I know Andy Wines has talked about the customer acquisition cost before. Is there a simple formula for that? I have never figured it out because I don't know if I need to, or is that like a different type of business that would need to know that?
Everyone should have a good sense of what their customer acquisition cost is. I would argue that at the size of most of the small businesses in the IC, your number one biggest cost is time. However, if you are investing in a CRM system, email automation, social media managers, those type of things, those are all costs of customer acquisition. So what you really look at is, how much do I spend trying to find a new client? And so it's probably all the marketing expense, all the sales expense, any direct expenses, like I want Megan to hire me, so I pay for the lunch, or I pay for the coffee, or whatever when I meet with Megan. Any driving, maybe it's conferences, all the things that you're doing where you're considering prospecting. And then I think you got to add your time. You got to figure out, what is my time worth? Again, not my billable rate, but like, what's that minimum that if you didn't at least get paid that at the end of the year, you would be resentful? $15 an hour, $50 an hour, $100 an hour. I don't know what it is for you. I add all those things together, and then you literally divide it by the number of clients that you get. So if I get 10 clients in the year and I spent, $10,000 on some of those marketing efforts and another $50,000 worth of time, my actual cost of client acquisition is $6,000. Is that $60,000 divided by 10 people? And it's when the time gets away, and it's the one piece we don't actually track on. It's not the only piece, but it's probably the most important piece that's not on your financial statement, is time. Then your cost of customer acquisition would technically be $1,000, because it's only the $10,000. But when you add your time, or if you had to hire someone to go do that job, is another way to look at that. Now all of a sudden that cost is $6,000. Well, am I getting at least $6,000 from each client? Because I need to, and that's just to break even before I pay for my website hosting and rent and utilities and that type of stuff. Does that help, Susie? Does that get where you're going?
Maybe. Yeah. Yeah, the ROI, I think can be a little bit tricky to figure out, in terms of, like, if I hire this person, how much, is it going to be? I think working backwards, like finding out the client acquisition cost, can help figure that out, narrow it down at least. But I think that's kind of the beauty of this whole thing too, is like, it's a journey having a business, and then more you kind of get into the nuts and bolts of how things actually work and how they relate to your numbers and how it relates to your decisions, the more you can see how all the pieces fit together, and then also prepare to hire, for those pieces. Because like Brett said, like, how much would it cost to hire somebody to do this part, and how do I keep them accountable, and what are their goals going to be when I hire them, so I know that they're giving me an ROI on that time saver. So it's a whole process to learning your numbers and how it relates to your business and your growth. Because all of those things kind of come together. But going back to the original thought of just some things to also ask, I think the other thing that's really important for small businesses, especially a lot of them in the IC, is to ask, your accountant about what you need to be thinking about or planning for your tax liability, because that's another big area where people miss it, and then they're not prepared for their taxes, or their tax liability, and that can be really stressful. So like each month, you should have some kind of an indicator of like what your tax savings should be, or at least be having that conversation ahead of the end of the year of what are some things you should think about or maybe change. There's a lot of different things related to the tax code and entity structure and leveraging strategies that are really good conversation points to be talking to at least your tax accountant about, if not your bookkeeper, to kind of make sure you're more proactive about those things before the end of the year. So that's another big thing that I would recommend asking about. And then there was one other thing I was going to mention, and I lost my train of thought. So.
It's anything you don't know why it's categorized there. A lot of times when you're working to do categorization of bookkeeping, particularly if you buy stuff on, can I name it? I'll just say it, PayPal.
Amazon. Yeah.
Amazon. Oh yeah, Amazon. Yep, you have a charge from Amazon. You have a charge from Amazon. You have a charge from Amazon. Oftentimes online shopping platforms, eBay is probably the same. There's no detail behind it. Or when you buy it on PayPal, it's like letters and numbers assembled together, and you're like, what was that purchase for? When you import that into QuickBooks or Xero or another system like that, there's no necessarily tie to what that is. So sometimes it gets dumped in a spot based on like experience of where those things tend to go. And, you kind of need to look at it and say, hey, what is this? How did it get there? Particularly if it's something you've never bought before, and it's just sort of like, doesn't fit in the pattern. Seems like it should go here. And so if it doesn't look like it belongs, you're like, oh, I don't remember spending $1,000 on travel this month. Those are the things to ask. And it may be a secret trick by your bookkeeper wanting you to engage with them and ask them a question. No, I'm just kidding. That's not. But that's one of the things. If you ask, why is that there? Just remember that serious thought process. If you ask that question, you should be asking whoever's doing your numbers, or if you're doing them yourself, you should double click on that number because it will show you all the transactions.
Yeah, that make up that number.
Like, look at that.
Yeah. And coming from a bookkeeper, we actually really like those questions. I know we've had clients before that are like, oh, I didn't want to ask that because I thought it was a dumb question, or I should have known this. We get that a lot too. Like, I should know this, so I don't ask the question. I just want to reassure you from a financial person, we love questions because it helps us to get to know your business better and you better. And then it helps you to know more about what makes up your business as well. So like I always like it because that means you're being proactive on your side as well. Like I always tell my employees, we can't care more about our clients' numbers than they do. Like those aren't the type of people we want to work with. So we actually really welcome when people ask more questions because it shows that you're vested into the success of your business, and that's a really great way to be as a business owner. Like I think a big pillar of being successful is being proactive. So asking those questions anytime you're not sure, we don't take it as you being dumb or not understanding something you should know. None of us know how to do the things we don't know. Of having professionals work with you. We don't know what we don't know. That's why we hire professionals. So we're there to help support you. And your bookkeepers and accountants are there. I'm almost 100% sure they are. And if not, then maybe it's time to figure out somebody else who will be. But that is definitely something we want to do for you. So no such thing as a dumb question.
Cool. Are there any other items that are coming to mind? Because I think this is a good topic, and we're going to continue to have more and awesome good topics as we go forward. So I'm just calling to see if there are any additional things that are standing out. Otherwise, I want to continue to plug that the Money Slam it's a standing meeting, and so we're looking at the first Wednesday of each month just continuing this flow, continuing this process. And I believe the next first Wednesday would put us on the 2nd of August.
Mhm. Yeah, which can you believe it's already almost August? Well, that's crazy.
I'm saying, you make time go by too fast.
Yeah. Oh, pretty cool. Does anybody have any questions or any topics that you'd like to hear kind of going into the next second half of the year?
I had a question about vehicles, and I think I posted that in the group. So if you wanted just to respond to that, that's cool too, because it's in the
Sure.
thread.
Okay. Yeah, I
yeah.
think that one was whether you should buy a business under the company, right, or not. Yeah. I guess my advice on that topic, if you want me to answer it now, would be to go with the mileage deduction unless you're using the business or the vehicle on a frequent basis. So like if it's not going to be a business use frequent, like a frequent business use type of thing where you're driving more for business versus personal, usually the mileage is the better one, the better benefit that you're going to have from that anyways. And then it will also throw less flags. Like if you have a business that you're going to be at home, you know, and you have a vehicle under your business, that could be something that, you know, would come into question a little sooner than just a mileage deduction. So that would probably be my more conservative maybe recommendation for that.
You don't think I should get like a pink vehicle with a big panty liner strapped to the top and drive that around? No.
Maybe
some people
that's
do.
a consideration.
Okay, cool. Thank you.
Problem.
Well, hey, I'm looking forward to continuing to see you coming. Thank you everyone for coming. Thanks for asking questions. Hopefully you're getting some value out of this, and we're going to continue to bring more and more amazing content here. And I officially just did drop the suggestion to the team line there with the Idea Collective on doing that budget piece, because I think there's it's something that seems to scare people, and I don't think it definitely doesn't need to. And I think it's easier than most people have, particularly if you're coming in with numbers already done. There's some simple ways to make that happen. So again, on behalf of Megan Schwan, Brent Halfwassen, Lincoln Karazi, and Julie Callahan couldn't make it this time, but they will make it again. Idea Collective Small Business Incubator, and thank you again, Quick Trip and Bank 59. Enjoy the rest of your day.
Thank you.
Bye.